Welcome to Second Take, the show that takes a look at the issues behind the news. The much-anticipated hearings into Eskom's latest revenue application begin next week, and a hearing date has also been set for Eskom's retail tariff plan application. Terence Creamer joins me to discuss both hearings and the likely outcomes. Hi, Terence.
Hi, Chanel.
What can we expect next week as the MYPD6 hearings kick off?
Well, I think it will be what we've experienced in previous public hearings. So there's going to be Eskom making its case, and there's going to be everyone opposing that case. And Eskom's case is basically to get a much higher revenue, allowable revenue, than it's currently getting, which has implications for the tariff. So it's wanting to pump up its revenue to sort of 446 billion rand a year from next year, rising at the end of the tariff horizon to over 536 billion rand. And the implications are for April 1 next year, if they get that, is that the tariff will increase to 36% next year, and then followed by an 12% hike, and then another 9% hike, which, as you can imagine, is not going to be popular in this current environment. So that's what we can expect next week, is a lot of opposition to Eskom. There will be adjustments that Eskom makes, because, you know, this tariff submission that everyone's discussing or been making their comments on was prepared under very different circumstances. We were in intense load shedding at the time, a very heavy reliance on diesel, but basic elements, the basic components will be there. I think some of the arguments will be the usual suspects, like your coal costs are out of control, your staffing costs are out of control, your efficiencies need to be focused on Eskom, and until you do that, you shouldn't be getting anything. There will also be the usual suspect of corruption and whether we are paying for that in the tariff. But there'll be a few, I think, new ticket items. I think one, the fact that Eskom hasn't done a new socio-economic impact assessment. They're still relying on one that they did for the MYPD6. And I think that's going to be an area of attack because especially under the Government of National Unity and having this focus on containing the cost of living, you know, and what the impact of these hikes are going to be on inflation, but also just we can see the affordability crisis that the middle class is experiencing. It's not just the American middle class. And you know, that was a major feature of their election. It's also the South African middle class under huge pressure, and the lower middle class in particular, really struggling to pay the rates and for the services. So this affordability issue is going to be a major feature. And I think one newish ticket item will also be the featuring of these negotiating pricing agreements in the tariff. So the rest of us have to pay for that. These are special deals that big smelters basically get. And there's a number of additional ones. It's an industrial policy decision. Do we sustain a ferrochrome industry given in a context of high electricity prices, or do we force them to basically close? The decision was that we need to support them, but that means that the rest of us have to pay for that. That's going to be, I think, a feature as well. So it's a combination of the usual suspects. Again, things like the return on assets, you know, should Eskom immediately go to such high levels of returns that they're wanting? They'll say that they're still sub-economic returns, and they have a good argument around that. So, and then there will be one area, I think, of good leeway for Eskom, and that's demand. You know, they've got a fairly conservative demand outlook, and that's the denominator in setting the tariff, with the other elements being the numerator. And if you can have a higher level of demand, it does reduce the ultimate tariff. I think there's some area for give there, because with load shedding stabilizing, demand should be a little bit higher. With the economy hopefully starting to grow again, we aren't seeing that massively yet, but if there is growth, there should be a little bit demand. Or has growth decoupled from electricity? That will be a debate as well. So there'll be the usual suspect, there'll be a few new elements, but generally it's going to be the typical Eskom making its case and everyone else opposing Eskom.
What is the most likely outcome?
Well, I think the outcome's almost predetermined in some ways because of this conflict of the electricity minister being the shareholder minister, as well as being the responsible for policy and government policy, he's already said it's untenable, unaffordable. So if that's your shareholder minister, in the past we would have a separation. You would have the energy minister, and really worrying about this, and the finance minister, but you would have someone in the Eskom camp, at public enterprises, at least arguing the case that we understand that there needs to be a sustainability argument here for the utility. So the fact that government has said, and the government of national unity generally, but also the minister in charge, who's also the minister in charge of NERSA, it's a total conflict of interest, but that's where we are at the moment, has said this is unaffordable and untenable. I think that we know that Eskom's not going to get what they want. So now issue is, what do they get? It's not going to be anywhere near the 36% from next year. And then it's going to leave gaps. That has implications. It's going to leave gaps. Eskom has made the case that it's not at cost-reflective levels. So the gaps, there's only two ways to close these gaps. One is through a higher tariff, which they're not going to get. The other is to lean on the taxpayer. Now, we also know the fiscus is really under huge strain. We know there's huge needs in this electricity area. The electricity supply industry is fragile in a number of areas, especially at the distribution end. And those municipalities are concerned about the implication of higher tariffs on paying customers. So they also want to keep this under control. But there is a sustainability issue for Eskom if they don't get these tariffs, and they'll have to look at other sources. They're disallowed currently from the debt relief plan from going to the capital markets to raise that, to close the funding gap. So it only leaves the taxpayer. So where's that taxpayer going to come in? It's not clear. There's no indication in the budget policy, the medium-term budget policy statement, that they're preparing to help cover these gaps that could arise. So are we starting another cycle of unsustainability again? It's a big question, but from our perspective, it doesn't look like Eskom can get what it's asking for.
Then there's the retail tariff plan that Eskom is also hoping to implement next year.
Yes, and this is parallel, and it is parallel because they need to both be implemented on April the 5th, but it's unfortunate it's overshadowed by the MYPD6, which is a big ticket item and needs to have the focus of the nation. But it's really a difficult time to be asking people to apply their minds to a highly complex set of arrangements that Eskom is proposing for restructuring the tariff fundamentally. It has major implications for all sorts of things, for people with rooftop solar all the way through. Time of use tariffs, which everyone would agree we need to do that, but we haven't had those. So it's major changes are embedded in this plan. They're not entirely new because Eskom's tried this before and NERSA has kicked that can down the road. I think we've got to the point where we can't keep kicking the can down the road. The tariff structure is a problem. It's a problem for Eskom, the sustainability of the industry, the fact that the tariffs aren't unbundled is an issue. So the problem for me is that these are complicated matters and ones that stakeholders really need time to apply their minds to. What are the implications? There could be a number of unintended consequences, even in the unbundling of the tariff. It's needed, but how are we going to do it? How are we going to do it in a way that's supportive of people continuing to invest? I think rooftop investment has been a major game changer in South Africa, and we need to make sure that those price signals are still in place to allow people to put in their own capacity. It's going to be the future. It's going to be a major part of the system in future, and it's a helpful part eventually. At the moment, it's a disruptive part, and we need the tariff structure to send the right signals, and it's not. But to have a public hearing planned initially for Christmas Eve, luckily they've changed that to now the 17th of December, but it's a small mercy. 17th of December, anything past that public holiday, the 16th, it's summer holiday mode. Are people really going to be applying their mind? Then they want to make a decision, obviously, on the MYPD on the 20th of December. They want to make this before the end of January. I really think there needs to be some gives to allow people to apply their mind. The problem is these processes have to be submitted back to Parliament at a certain time frame. So we have got limited time. But it's really not ideal to be looking at a really complicated, complex game-changing, far-reaching implications structure to the tariff at this time of year when actually all eyes are on the hike and not so much on the structure. And that structure has big implications. So I really think that NERSA has to, they made some change to their scheduling, but I really think that we need more time to really digest what's in that plan. So society is going to be impacted, and we really can't afford the wrong signals again to be sent. We know that the wrong signals are being sent under the current structure and needs to be changed, but these are major, major changes that we have to understand. Everyone needs to have their say on, and we need to go into this new structure with our eyes wide open.
Thank you. That's the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis. Also, don't forget to listen to the audio version of our engineering news daily email newsletter.